Good afternoon, and we will be getting started in just a minute or so here. Thanks to everyone who's joined us today. You're going to be getting some really great information about successful loan modifications and also how to apply for the mortgage assistance relief that's available through the state of California, Cal HFA. And we also have Jackie, who's with the California DFPI. They changed from DBO to DFPI, so she'll be joining us and talking about her agency and what her agency provides. And yeah, we've got some really great information, so I'm going to give people just 1 minute or so here to join us, and then we'll go ahead and get started. If you do have any questions, feel free to send them in the chat box or in the question box, and we'll be happy to answer your questions for you. Thanks again for joining us, and we really appreciate your participation today. All right, well, it looks like it's just about a little bit after 12, so we're going to go ahead and get started. So my name is Connie Dertarosian. I'm with HomeOwnership OC. Today we'll be talking about help for homeowners, how to access a successful loan modification, and also how to get mortgage assistance funds through the state of California. So a little bit about myself. I am a HUD certified housing counselor, have over 20 years experience in the nonprofit housing counseling world. And I did survive the first housing crisis back in 2008, and so we learned a lot from that experience. And you know, this time it's a little bit different go around, but we have a lot of experience from that past situation. So we also have with us Jackie Wiley. She's the Target Outreach Specialist for the California Department of Financial Protection and Innovations. And she'll be providing some slides towards the end of the workshop and talking about what the California DFPI does. And Jackie and I have worked together for quite a long time. And Jackie, did you want to say hello and at least introduce yourself? And then I'll bring you back at the end.
Yes, thank you, Connie. It's really a pleasure to see you and to know that you're still being an advocate for home ownership. Like she said, I'm one of the targeted outreach specialists with the department. I'm going to give you information briefly on who we are and what we do. I've been doing outreach with the department probably for 22 years and just providing information and resources on how to make informed financial decisions. So thank you for having me today.
All right. Thank you, Jackie. So Jackie beat me on the timeline. She's 22 years. All right. So today we're going to learn about forbearance programs, what happens after they end, what options are available, how to apply for a successful loan modification, and the mortgage help. We're going to talk a little bit about fair housing protections, and then we'll also talk about the California DFPI and what they provide, their resources. So HomeOwnership OC is a nonprofit HUD-approved housing counseling agency. Our mission is to promote and preserve the dream of homeownership through outreach, education, and counseling. We were started way back in 2007. We've done over 70 events and educated over 17,000 individuals. We do provide information on rental counseling, credit counseling, home buying, of course, foreclosure prevention, and real estate, avoiding real estate scams. Loan modification scams as well. We're seeing those again. And we do partner with the Fair Housing Foundation for our rental and fair housing information and refer clients over to them if they do have fair housing complaints. We'll be covering a little bit about fair housing as well. Our website, homeownershipoc.org, you can find lots of great information there. So as I said, we do partner with the Fair Housing Foundation, which is our fair housing partner here in the Southern California area. They're also a nonprofit HUD-approved agency, and their mission is they're dedicated to eliminating discrimination in housing and promoting access to housing choices for everyone. They do provide fair housing, landlord-tenant counseling, rental counseling, and help over 7,000 clients a year. So they're very busy, and we send over our fair housing issues as well as anybody who may have a complicated rental issue. We'll send them over to our partner. So a little bit about the help that's available now. Of course, there is help available for homeowners who are struggling due to the pandemic. Initially, everybody was kind of put on a forbearance, which is a pause in your mortgage payments, and it can be used on your first, second, your HELOCs, or lines of credit. And it will usually be for a period of time, usually three months, 6 months, or 12 months. The most it can go up to is 18 months, so we have seen that happen. But usually it goes in 3, 6, 12 months periods. There are various loan workout options available after your forbearance plan ends. It kind of depends on what's happening with you. And you should really be working with a housing counselor to figure out what those options are and what the best option is for you going forward. One thing is you should definitely keep in communication with your servicer, register for an online account, or add their app to your smartphone so you can have early communication with them. And because I know a lot of them were very busy in the very beginning. Now, forbearance is not loan forgiveness. So even though you had a pause in your mortgage payments, you will have to pay that money back in one way or another, either at the end of the term or with a loan modification or repayment plan. We're going to talk about some different options, but you will have to pay that money back. It's not forgiven. So you should contact your lender as soon as possible, as soon as you know that you're going to have a hardship. Stay in communication with them, download the app, sign up for their online account. They have a lot of documents, loan modification packets and things on their online system. And then, as I said, if you're not working with a counselor, you should definitely work with a housing counselor, because we'll help you kind of evaluate your situation to see what workout option is the best for you going forward. You want to ask them when you go into the forbearance, how will I be required to pay this once it ends? What options might be available for me? Will you be adding this to my monthly payments to help me catch up? Can you add it to my unpaid principal balance, deferment? And during this time, you definitely want to watch out for scammers who are not your lender or servicer. We just had a call today from somebody who said that they were working with this company that's going to help them with a loan modification when we were already working with the client. And they had already been scammed out of some funds initially, so for once. So I'm hoping they don't do that again. But believe me, the scammers are out there and they will contact you. So please beware that there are people out there trying to, intimidate you and, tell you that there's help available when it's really all they are is taking your money and doing what we would do for free. So really important to work with the HUD housing counselor. You can look us up. We're on the HUD website and we're all legitimate. So it's important to know who owns your loan. Fannie Mae, Freddie Mac have loan lookup tools that you can go and see if it's owned by Fannie or Freddie. FHA, you can call. You should hopefully know if you have an FHA loan or a VA loan. But if you do need help in looking up your loan and finding out who owns your loan, a housing counselor can help you do that. So these are federally backed loans, which just means that they have special loan workout programs that are available for individuals who have their loans backed by Fannie, Freddie, FHA, but it doesn't mean that you wouldn't be eligible for other workout options. It just, there may be special plans that are associated with those programs. So as I said, there's many workout options. There's also some mortgage relief that's been announced through the state. And so there are definite programs that can help you. You want to exhaust all possibilities. Of course, rather than go to foreclosure, there's always the option of selling your property. As I said, federally backed mortgages like FHA, VA may have special COVID loan workout modifications and options, and so it's important to know who owns your loan. Conventional loans also have loan workout options available, so just because your loan's not backed by a federal government doesn't mean that it won't be, that you won't have workout problems or workout options available. Now, when you're on a forbearance plan, 30 days prior to it ending is when you want to start working on gathering your loan modification documents and getting that paperwork together, because it will probably take about 30 days to apply for a loan modification or some type of workout. Sometimes there's a little bit of back and forth that happens with the lender. So the options that may be available are repayment plan, forbearance, loan modification, streamlined refi or modification, deferment, or reinstatement. So what do those mean? So repayment is not a loan modification. That's a repayment plan is where the lender agrees to let you, as the homeowner, pay more than your monthly payment to get the loan current. So let's say you're $2,000 behind. They're going to spread that $2,000 over 6 months and let you pay your regular payment plus a little bit more until you get caught up on that $2,000. So that's a repayment plan. That's not a loan modification. That may be the first thing that they offer you. Forbearance, of course, is the suspension or pause in payments for a period of time. They can extend the forbearance. So if initially you got a 6-month forbearance, but you're still not back to work, they can extend it for another 3 months or 6 months, you know, if you need a little bit more time. Loan modification is where the loan is modified and restructured, and you will have to provide documentation for that. Special modification is where it's a modified plan for families impacted by a federally declared disaster, which, you know, a lot of them have COVID-specific plans. So if you were impacted by COVID, you want to let them know that my hardship is due to COVID so that you can qualify for those special modification plans. There's also what's called a streamlined refinance or modification, where the lender rewrites the terms of the loan using a refinance or a modification in a streamlined process. So they may not ask for all of the documentation that would be required under a regular modification, and they kind of streamline that process and just automatically give you that modification or refinance. Deferment, is where they would place the amount that you're behind back into the principal balance, or make it a balloon payment at the end of the loan. So you'd pay it off at the end of the term. So a lot of people thought that they were getting this automatically after forbearance, so not necessarily. So it is one option that is available, but you do have to talk to your lender and see what kind of options are available. Then, of course, there's reinstatement, where you just pay back the full amount that you're behind on your mortgage. So if you can't pay your mortgage, even while you're on forbearance, make some payments, catch up on your taxes, insurance, or escrow account, because it does make it easier for you to qualify for workout options if you're caught up on at least your taxes and insurance. And if you're, getting to the 12-month mark, it helps if they're going to apply a couple of payments, if you're able to make payments, so that we have less money that we have to deal with at the end of the term. So create a savings plan if possible. While you're on the forbearance plans, it should not be affecting your credit. They will not be reporting you as late. So we have gotten many successful loan modifications. This is a sample copy of a loan modification agreement. You want to read it and make sure you understand the terms and make sure that it's really going to work for you. Don't sign anything that's not going to work for you. Again, it's really important for you to be working with a housing counselor to make sure that you're getting a good workout deal that's really going to work for you and that you can afford. One question that we get quite often is, will I need to have regular steady income before I apply for a loan modification or workout? So the answer to that question is yes. So we have to show the lender that, yes, once they modify your loan or give you a deferment, that you'll be able to make those payments. So you will need to be back at work, having regular income. You need to show them your plan going forward that you will be able to make those mortgage payments once we've come up with a solution. All right. So for those that don't have income, we say, you know, take advantage of the forbearance time to find new work, apply for assistance, reduce your debts, create an actionable workout plan with your counselor. Now, I know with the CARES Act, there was some additional unemployment programs. So it was, you know, lots of people were on those that could help them pay their bills, pay things down, defer payments on credit cards and things like that. So take advantage of that time to apply for whatever programs may be available. If you have a small business, you can also apply for small business loans and grants to help you get through that difficult time. Again, you will have to have regular steady income to apply for loan modification and mortgage assistance programs. So as your counselor, we're going to tell you, if you're on unemployment, we don't want you to apply for the loan modification until you're back at work and you have some work coming in, or you're renting rooms and you can show them that you have, you know, funds coming in. If you have no prospective income in the future, then you want to talk to your counselor about what options are available, how we can maybe increase your income. Like I said, possibly rent out rooms, or, you know, get a side gigs where you're trying to increase your income. If we absolutely have no prospective income in the future and no loan modification options available, then it's definitely a possibility that you may need to sell your property. Much better to sell your property than to go into foreclosure, and you're going to lose thousands and thousands of dollars in foreclosure fees, attorney fees, and all of that. Now, we haven't seen a whole lot of short sales, but short sale is another option where it's the sale of the property where the servicer agrees to accept the proceeds of the sale, even though it's less than the amount owed. So let's say, for instance, you owe $400,000 on the property, but it's only worth $300,000. You would apply for a short sale, and you'd have to ask the lender, "Can I sell it for $300,000?" They would have to accept it. It would have to be approved by your lender, and you will have to show documentation that you have a hardship and that is the true price of the property. And the reason why we're not seeing too many short sales right now is because most people have equity in their property. So it's a much better option for you to sell your property, take that equity and go buy something else, than let it go to foreclosure and lose a portion of your equity. So again, you want to talk to your counselor and come up with options that, explore every option to try to save your home. Sometimes selling the home is the best option. Of course, early communication is key. So as soon as you know you have a problem, contact your lender 30 days prior to the forbearance ending. You're going to definitely want to contact them and talk to them about options that are available. Request a loan modification packet. The initial forbearance plans don't require any documents, but for longer workout plans, they may ask for a hardship letter, income information, bank statements, tax returns, all of that. Make sure you give them complete information and include your loan number and document all correspondence with them. As I said, hopefully we don't have to get to the point of selling your property, but it's much better to sell your property than to go into foreclosure and lose all that funding. So first, we may apply for loan workout options and see what's available. But one question we often get is, do I have to be denied a loan modification or workout before I can apply for the Cal HFA mortgage relief program? So a lot of people call us and say, I want to apply straight off the bat. And we say, well, have you applied for a loan modification? No, not yet. Okay, well, you have to be denied. Yes, the answer to the question is yes, you do have to be denied a loan modification workout from your servicer before you can apply for California mortgage relief. So some qualifications for that program: it is open, it is taking applications currently. You can get up to $80,000 to help make up in those back mortgage payment. It does go directly to the lender. It's only available for first mortgages and your primary property, so you have to live there and it has to be your first mortgage. And you must meet some income and loan limit guidelines. They will ask you for income, utility bills, bank statements again. You must have a COVID-related hardship, and you have to be at least 2 payments behind. Again, you do have to be denied a loan workout option from your lender. So a lot of people were in the process of getting loan modification and they still want to apply for Cal HFA funding. And we say wait and find out if you get the loan modification before you apply, because most likely you will be denied. So it's really important to work with a housing counselor to be most successful with these programs, because they are a little bit complicated. To apply for the program, you can go to their website at californiamortgagerelief.org. Again, I say work with the housing counselor so that you have your best options available. This is one of the options that's available, but we're going to explore every option with your lender and try and get you a successful workout prior to you applying for this program. All right, so what are the important things to remember? Start early, ask for help. Make sure you sign up for that online account so you stay in communication with your servicer. We as HUD counselors are always going to say, stay in communication with your servicer. We're not going to tell you, don't call your servicer, don't answer the phone. You should definitely keep in touch with them and keep in touch with us. If you can pay your mortgage, reduce that amount that's owed. Read all of the documents. If you don't understand it, get help from a housing counselor. And of course, look out for any type of fair housing issues. So I'm going to cover a few minutes of fair housing, and then we'll turn it over to Jackie. But if you do have a question, feel free to send it to me in the chat box. I'm happy to answer your questions. All right, so we're all covered by federal and state fair housing laws. Under the Federal Fair Housing Act, we are protected due to our race, color, national origin, religion, sex, familial status, and disability. California laws are more expansive, so that also includes sexual orientation, gender identity and expression, marital status, medical condition, ancestry, source of income, age, genetic information, and arbitrary discrimination. So essentially, the Fair Housing Act covers all types of housing transactions and pretty much, rental housing, selling housing, insuring housing, lending for housing, all of it. Foreclosure, prevention, all of it is covered under the Federal Fair Housing Act. So if something doesn't feel right, you suspect it's discrimination, reach out to the organizations and just inquire. Housing discrimination may include blocking someone's access to housing, treating a buyer or renter differently due to their protected class status, or denying someone the right to buy or rent a home even though they can afford the property. So again, it's illegal to refuse to sell, lend, rent, or lease housing, represent that a dwelling is unavailable for inspection, sale, or rental when it is available, provide different terms or conditions, privileges, just because a person is a member of one of those protected classes. It's also illegal to cancel or terminate a home sale, loan, credit application, or rental agreement, or refuse to provide reasonable accommodations or modifications to a disabled person, or make unlawful inquiries. Now, in real estate sales, discrimination can include lying about or exaggerating sale terms, failing to inform buyers of all listings, stalling to avoid showing a home, running discriminatory ads, or refusing to negotiate with the prospective buyers. An example would be a realtor tells a family that you wouldn't be comfortable in this neighborhood because it's just for professional adults. That's keys for no kids allowed. So that would be a big red flag, right? So that's some examples of real estate discrimination. Now in mortgage, some examples of discrimination may be scrutinizing your loan application more closely than another, giving unreasonably low appraisals. There was an article in the New York Times about an African-American family that got a very low appraisal, so they ended up taking out all the pictures and everything in their home and getting a second appraisal, and it actually went up. And so they did a big investigation. It was a big article in the New York Times. So even in appraisals, there can be discrimination, imposing different loan terms or conditions, or denying loans in certain neighborhoods, which would be redlining. It's also illegal to target borrowers based on protected class, like Spanish speakers only, etc. So again, if anything feels that it wasn't right, or you just suspect discrimination, these are some red flags to watch out for. Refusing to provide information regarding mortgage loans, steering an applicant toward a bad or inferior loan product, unnecessarily requiring a co-signer, applying different terms, conditions, approving or denying loans based on their protected class. Again, if anything feels weird or you just suspect discrimination, it doesn't hurt to just call and get some resources available. So there's also what's called disparate treatment or disparate impact, where a rule or a policy may have a discriminatory effect, even though it wasn't meant to be. It can have a disparate impact on an individual and results in discrimination. The Equal Credit Opportunity Act also protects you against credit discrimination under all those protected classes that we talked about before. It also includes the fact that all or part of the applicant's income is from public assistance, or that the person has in good faith exercised any right under the Consumer Credit Protection Act. So again, you're protected under the Equal Credit Opportunity Act, and it does apply to all loans and credit cards, car loans, home loans, student loans, personal loans. And it covers you from the time the person applies for credit to the time when the person, till the account is closed. Some examples of lending or credit discrimination would be rejecting a credit application based on a consumer's protected characteristics, changing the credit terms or conditions, again, because they're protected class, or asking if a consumer receives alimony, child support, separate maintenance payments, asking if you're widowed or divorced, or asking for information about a consumer spouse, like you have to include the spouse's income. It's also may be discriminatory if they refuse to consider public assistance income the same way they do as any other income. Or if you're offered credit with a higher rate than they applied for, even though you qualify for a lower rate. Again, there can be discrimination in dealing with foreclosures. As you're working with your servicer, if they're refusing to provide the same forbearance terms to all protected classes, providing less favorable loss mitigation terms to certain protected classes, denying forbearance to certain protected classes, or failing to explain available foreclosure prevention policies. Also offering harsher collection or foreclosure practices because of their race or national origin, or where the residents may live. But just be on the lookout for those kind of red flags. Disabled buyers and renters are also protected under the Federal Fair Housing Act, and they have a right to reasonable modification and accommodation to get full use and enjoyment of the property, and everyone must abide by those fair housing rules. And they can't refuse to deal with you or treat you differently because of your disability, or because your income source is from disability income as well. Now with COVID, it is illegal to deny housing to being from one of the countries affected by COVID, or if they perceive that you are from one of the countries, but maybe you're not. It's also illegal to have different rules for persons because they're from a country affected by COVID or perceived to be from there. And again, it's illegal to refuse to sell, make loan, offer credit, or rent because they're profiled on the basis of race, national origin, or protected classes, or to be associated with COVID or someone who has been affected by COVID. Individuals affected by COVID are covered under the disability protections under the Federal Fair Housing Act, and you're also covered if you're taking care of someone with COVID. So there's been a lot of strange things that have happened in regards to COVID and changing some of the rules and things like that. So again, if you have any questions about fair housing, feel free to reach out to us for assistance, and we can also put you in touch with one of our fair housing partners. Now, as you guys tell me, is this discrimination? A non-minority couple applies for a loan to purchase a home. The loan officer provides them with information on a number of eligible loan programs, and a minority couple also applies for a loan to purchase a home. The loan officer discusses only FHA financing. What do you think? Is this discrimination? Send me a message in the chat box and let me know. Yep. Very good. Yes. Yeah, they have to offer you every single loan product that's available, right? Even if FHA was the best option for you, they should offer you the same that they're offering to everybody else. Mm-hmm. All right, here's another example. A home buyer asks the real estate agent what is the ethnic makeup of the neighborhood where he's showing them the properties, and the realtor refuses to answer the question due to the Fair Housing Act, and instead asks the buyer to do their research before buying. Would this be discrimination? What do you think?
No.
Do you think the realtor did the right thing? No, you're right. Very good. You guys are super smart. So no, the realtor did the right thing there, right? They said, no, you have to do your own research. You check out the neighborhood, see if it's someplace you want to buy, but I'm not answering questions about the ethnic makeup. Very good. Mm-hmm. All right, last question. A homeowner faces foreclosure. Facing foreclosure calls a mortgage modification company. They hear on Spanish radio. They had put an ad on there. And the company promises a modification for a fee, collects the fee up front before providing services, and then encourages him not to make his mortgage payment or call his lender because they're going to take care of everything. He never gets the loan modification, loses his home. Could this be discrimination? What do you think? So,
no, a scam.
Well, yes, you're right about that. It's definitely a scam. But yes, it could be discriminatory because they're only advertising on Spanish radio to Spanish borrowers, so they're targeting the Spanish community. So it's both. It's a scam and it's discriminatory. So very good. Good answers. You guys are very good. And yes, they're definitely targeting the Spanish-speaking community, and that is a true story. I hate to tell it, but true story of a client. So that covers our discrimination. Again, we covered loan modifications and different workout programs, the Cal HFA program. And again, you need help, contact us. We're happy to help you. For free, and we'll tell you how to avoid the scammers, okay? So next up, I'm going to have Jackie jump back on, and she's going to talk about the California Department of Financial Protection and Innovation. They got a mouthful of an agency name, but we got some great information about her services and how they can assist you.
Okay, thank you.
So take it away.
Thank you so much, Connie. That was great information, and I was learning as you were speaking as well. Next slide. So like Connie said, the Department of Financial Protection and Innovation, that is a mouthful, and I will use DFPI as I go through this brief presentation. Who are we? You're probably asking yourself that, but we were formerly the Department of Business Oversight, and we are a state regulatory and licensing agency for financial institutions, products, and professionals with oversight over chartered banks and credit unions, California finance lenders, California residential mortgage lenders and servicers, student loan servicers, payday lenders, and escrow companies, as well as the PACE administrators. And what happened, Governor Newsom actually signed a bill into law, and it's called the California Consumer Financial Protection Law, and it changed our name from DBO to DFPI, and it extended authority to unregulated industries, and it's also given us more staff to ramp up our outreach. And so it now includes licensed industries for credit repair and consumer credit reporting companies, debt collectors, debt relief providers, and rent-to-own contracts. So we also conduct audits to ensure state and federal compliance. We review consumer complaints, and we pursue legal action against those operating illegally. And we all know that that's a lot going on, or using unlawful, deceptive, or abusive practices. And again, ramping up our outreach, we provide consumer awareness presentations throughout California to help protect consumers from falling prey to frauds and scams. I'm one of the targeted outreach specialists located in the Los Angeles office. We have 4 offices, one in San Diego, San Francisco, and our headquarters is in Sacramento. If you're unfamiliar with who we are and what we do, or you want to learn about more of the licensees and industries that we regulate, you can go to our website, and the link is provided there. Next slide, please. So how is DFPI getting information out to the consumers? Of course, you know, the pandemic has changed so much about the way we interact, and we're so used to being in person, which is starting to open up. But we do provide free presentations on various topics, financial empowerment, and of course, protecting yourself from fraud. We have this great educational publication that's available for distribution. We do have them in English and in Spanish, and we are in the process of revising them, and they are all free. In this booklet, you will get some information about some of the scams that we hear about, with a description about them. It also has a comprehensive resource guide in the back of it. And sometimes we need to learn to ask questions when we're thinking about doing business with a professional or an organization or an agency. So there is a form in there that's called Check Before You Invest, and it gives you like a layout of what you should be asking when you're thinking about working with a professional. Okay, next slide, please. So today's presentation is pertaining to mortgage modification and foreclosure, and there are mortgage relief scams and warning signs that I kind of want to go over today. So if you're having problems making your monthly mortgage payment, don't be deceived by the messenger, and please don't fall for the first offer of relief. And here's why. These scam artists use simple but potentially deceptive messages, like they guarantee to get you a loan modification or to stop the foreclosure process, no matter what your circumstances are. That's a red flag sign. And I know a lot of us want to keep the home in the family and just don't want to let it go. But like Connie expressed earlier, sometimes it may be just best to let it go. But falling for a message that you see on television, or someone tells you to not contact your lender, your lawyer, or a housing counselor, that's a red flag sign. If they ask for upfront fees before providing you with any services, that's a red flag sign. There are plenty of agencies, especially HUD counselors and resources such as the DFPI, that don't ask for any money up front. And if someone tells you to make your mortgage payments directly to them rather than to your lender, and that they'll take care of the payments for you and get you caught up, but you still have to pay them a fee, you basically could be paying it yourself. That's a red flag sign. And someone tells you to transfer your property deed or title to them, that's definitely a red flag sign. You basically just signed over the home that you were trying to keep yourself. And if someone pressures you to sign papers you haven't had a chance to read thoroughly, or that you don't understand, you want to proceed with caution. Don't let someone coax you or badger you into signing something right away before you have had the opportunity to read it, so that you can understand what it is that you're signing, okay? it's always best to contact your mortgage servicer first. And Connie and I both talked about that. And the DFPI would be the agency you would call if you don't know who your mortgage servicer is, or if your servicer is not helping you in the manner in which they should. You should let the department jump in and try to get that rectified for you, since we are the licensing agency for the mortgage lenders and servicers. And like she said, work with a HUD counselor, maybe help create a budget so that you can get your finances in order to start making your payments. Contact the DFPI if you're having those kind of problems with your servicer. Next slide, please. So the department, the DFPI, we actually we launched a campaign to help communicate resources to homeowners most at risk of losing their homes. We had social media messages, and they began with the department working to ensure that licensees servicing residential mortgages comply with state and federal laws protecting homeowners from COVID-19 related financial insecurities, and inform eligible consumers about mortgage relief funds. So of course, you know, we talked about the forbearance, and the forbearance went away. And so now people are, I don't want to use the word scrambling, but they're looking for relief opportunities to help them get caught up. And so always know that there are options and resources, free resources available. And again, always start with your mortgage servicer to see how they can help you. Like Connie's, suggested putting the payments behind, they call balloon payments. And what should I do if you're behind? Again, you have options. You have homeowners' rights. And then the California Housing Finance Agency, they have roughly that $1 billion in the mortgage relief funds. And also what our department did, we actually contacted all of the mortgage licensees to provide our department with information about the actions that they would be taking to help homeowners avoid foreclosure, which included a process of screening borrowers for potential eligibility for state and federal foreclosure aid, and procedures and plans for compliance with loss mitigation requirements, and also have them do an assessment of the magnitude of foreclosure risk among the loans that they service. So our campaign was pretty widespread, and I believe that happened like in September. So the department is definitely on board, and we have great information here, and you'll see the link for foreclosure protection and relief. If you have questions or you need more information, you can contact our department. You don't have to always call. You can simply email us at askdfpi.ca.gov. Next slide, please. So even though people may be in a foreclosure process or potentially could be foreclosed on, one of the things that we also found out is that people were placed into foreclosure due to a PACE financing program. What is PACE? It's a property assessed clean energy, and it's a financing program that helps homeowners to finance energy efficient and water saving improvements to their properties. But what we have found out, since the department is the licensee for PACE program administered and regulates the PACE industry, we've been finding out that there have been homeowners who entered into this contract without having any knowledge about what it was and how it works. Consumers definitely need to be educated about this program before entering into a financing agreement, because what has been happening, the cost of the project or the repayment of the program had been and still is and can be misrepresented. And what the misrepresentation is, it's claiming no money down or no out-of-pocket costs. So right off the bat, I'm saying, oh, this is a great program. I don't have to put any money down. But if you stop and think about it, somebody has to pay for this. So it gives the impression that all those services are free and that they are soliciting it as a government program. PACE is not a free government program. Homeowners need to know that you have to pay the money back, but it's funded through your annual property taxes. So many have entered into these financing agreements, and then they were coaxed into doing cabinets and refacing, cabinets and getting granite countertops. That has nothing to do with energy efficient and water saving improvements at all. And so now they're stuck and they're struggling with property tax payments, which has doubled and even tripled, and now are at risk of losing their homes and left with, as this picture is shown here, incomplete or unpermitted work. So because a lot of people have also heard the commercials or learned about the ADUs, which is the additional dwelling units that can be placed on their properties, we're finding out that they have been mixed up with this financing program, and then the contractor has either left the project undone or incomplete. So again, do your homework before signing any kind of contract for financing through PACE. Be sure you check the license of both the contractor with the CSLB and the lender who's going to be over the payments with the DFPI. So do your homework and contact us and go to this website so that you can learn about the risk and the laws to get answers to many other common questions. So remember that. Connie, next slide, please. So how can the DFPI help you? Again, if you're unfamiliar with our agency, now you know who we are. And those of you who own homes, have a question about your mortgage lender or servicer, your escrow agent, you can contact or go to our website to gain more information about that. If you need to file a complaint, here's a website. Here's the link right here to file a complaint. And you can always call our consumer services office, which that number there is toll free. I'm so proud to say that we have great in-person representatives where you don't have to press 1 or press 2 and wait all day long for someone to come on the line to service you. We also have multi-language capabilities. So if you're not an English speaker or your preference a different language, we have ability to help you with the different languages. When you call our consumer services office, like I keep saying, do your homework. We're able to verify whether the individual or the company that you're thinking about doing business with is properly licensed through us. Remember, if anybody is soliciting or doing any kind of business in California, you need to be licensed through us, which is a state level, or the Federal Trade Commission, the SEC on a federal level. So they can give you that information. They can also walk you through filing a complaint. And if it's not within our jurisdiction, we will be able to get you to the appropriate agency to help you with your complaint. If you have a simple question, if you're just unsure, you never heard of this company before, send us an email at askdfpi.ca.gov. If you're also interested in a publication that protect yourself from fraud booklet, we also have a great booklet entitled Path to Home Ownership, which includes a budget sheet in there that can give you more guidance on how to become a homeowner, and also list information about scams to be aware of. Or if you're interested in a presentation, you can email us at outreach.ca, dfpi.ca.gov. Next slide. We have to get our monthly newsletter or stay in touch with us, get information about event updates, our consumer alerts and important notices, and more information from the department. You can subscribe to our communications, and there's the link right there. And you can also follow us on social media. With the CCFPL, which is the Consumer Financial Protection Law, the Department of Financial Protection and Innovation is here to help, and we are in the business of trying to protect California consumers from unscrupulous business practices. Thank you for allowing me to share that information, Connie, and provide our resources.
Excellent. Thank you, Jackie. That was great information. And yes, we've heard about the PACE loans and those. I'm glad you brought that up, because that's also an issue that many of the homeowners we're seeing as well. So, all right, we had some great information. So again, just to recap, feel free to send, I know we have some questions. We're going to answer your questions. I'm just going to wrap it up here. Apply for help early. We work with the regulatory agencies quite often. We do help clients applying for or making complaints to the DFPI, the CFPB, or anybody who will listen if the servicer is not working with you correctly. You're certainly welcome to do that. Work on getting your income going, because we do need to do that to be able to have some kind of workout plan. We can help you with creating a spending plan and sticking to it. Make sure you avoid those scams and fake mortgage help, because it's horrible when clients come to us and they're like, I've already paid $5,000 when they could have used that money to pay their mortgage, right? So a lot of people out there will promise you a lot of things and not deliver. So if it sounds too good to be true, it probably is. Set yourself up for success by working with a HUD housing counselor. And if you do need one-on-one help, feel free to complete our online intake form that's on our website at HomeOwnership OC on our programs page. And pretty much I've added it to every page. So, all right, I know we have some questions that came in. First question is, what's the difference between a modification and a streamlined modification? So they're essentially the same things. It's just in a streamlined modification, they wouldn't ask for as much documentation, and they may just grant it to you, not having you provide tax returns and things like that. Usually streamlined modifications are usually with federally backed loans, but it can be with conventional loans as well. But we've seen them mostly with federally backed loans. Another question that came in, let's see. There we go. Jackie provided her information. I had a question for Jackie. We've seen some individuals contact borrowers and say, we want to buy your house. No, they're not buying the house. I take that back. That we want to pay off whatever's due, and it's like a rent. We're going to rent it back to you. And we've said that those are always red flags for us, right? That it's not a legitimate. I can't understand why anybody would want to pay off and then they say they're going to assume the mortgage. Have you heard about those programs? People making complaints about those. I mean, we've had clients contact us and say that they've been contacted by these companies. I don't know if that's something that you would regulate those folks. They're like investors going and approaching people who are distressed. So I'm wondering if
I haven't heard it through our consumer services office, but it doesn't mean that it hasn't come through. We also have a new unit, which is the Office of Financial Technology. So if investors are calling these people, I would still send them email the Ask DFPI to see if it's something that we could jump in on or investigate. If not, then I'm sure that they would be able to fork it out to someone. But I haven't heard. That's a new one for me, Connie. That's a new one for me. Yeah. Mm-hmm.
Okay, good. It's good to know. Mm-hmm. All right, and HOAs is another issue. So I guess we have had a client whose HOA actually foreclosed before the bank. So let's see, I've seen many that are not taking care of their homeowners, CCNRs, et cetera. Do you have any sources that can help with HOAs?
You know, as long as I have been doing outreach, HOAs have been the hardest to find an agency to help. Can you agree with that, Connie?
Yes, absolutely, yes.
The only thing that would come to my mind would be consumer affairs. You know what I mean? Because fair housing doesn't do HOA, so I can't off the top of my head say where that complaint would go other than consumer affairs or the attorney general's office.
Okay, no, that's good information. Yes, the HOAs are very difficult to work with, and we typically don't work with an HOA, but in this particular circumstances, they ended up, even though we were trying to let the client sell the property, they ended up foreclosing anyhow. So they were not very workable. So I'm not exactly sure about the HOA situation.
Yeah, I
So,
would check with the Attorney General's office for, questions.
okay.
Mm-hmm.
Okay, yeah, we usually send them to legal aid or public law and see if they, because it ends up being a legal issue with that.
And
So,
Bedzedek also, add them to your list.
yes, yes.
Mhm.
All right. Well, I know we went a little bit longer than we expected, but I feel like it was really great information. So if you do have additional questions, feel free to outreach to me. You can call us at 714-204-2314, visit our website at homeownershipoc.org, email me at cdt@conniedt.com, and we'll be happy to answer your questions, and I will forward them over to Jackie. I want to thank Jackie for joining us today. You provided some great information, and please share this information with your family and friends if they do have questions about loan modifications. They need help, so have them contact us and work with the HUD-approved housing counseling agency to get some help.
I have a question,
So thanks
Connie, really
again.
quick.
Oh, sure, absolutely.
Is help only from you guys for Orange County residents, or is it all counties?
No, we actually expanded and we'll do the whole state of California. So anyone in the state of California. So not just, our main focus is Southern California, but we do the whole state of California. So
great. Okay.
All right. Thank you so much. All right. Thank you, Jackie. Have a great rest of your day. Thank you guys for attending today, and feel free to outreach us if you do need additional assistance or you do have additional questions.
Thank you. Thank you for having me.
Thank you. All right. Thank you.
Take care. Bye.
Bye.